Typically, when you think of blue chips, most people go straight to the casino or an airy bag of Lay's potato chips, but not here, not on this channel. That's right, when we talk about blue chips, we're actually talking about blue chip stocks. A stock that can actually pay you just for holding on to it. But how? Let's find out. Hey everyone, it's Peter, and today we're actually talking about blue chips, the salt and vinegar based stock. Wait a second, screwed those two up. The stock that pays you just for holding on. And while we're discussing it today, I'll also be giving you guys a little bit of a heads up on some stocks that are great to hold on to that pay you fantastic dividends. So when I say blue chip, what does that actually mean? Well, blue chip stock is actually also known as a dividend stock. This is a specific type of stock that actually pays you money just for investing into it and holding onto a stock. By holding onto these shares, you're actually paid a percentage back of the amount of shares that you have, whether that be annually, semi-annually, quarterly. So why do companies do this? Companies do this as a form of giving back to their investors. You're giving them money because you believe in them and they want to make sure that they hold your trust, so they'll give you money just for believing in them. Now, these companies give you something called dividends, and dividends are paid out to you basically quarterly. And what dividends are is a share of the profits that the company makes in the previous quarter. These profits are usually gained back from the earnings. So if a company does very well during a quarter, you're going to have a very good payout on your dividend. Now, companies don't give out all of their profits. They just distribute a portion of it to all of their shareholders. Now, how much a company pays you back depends on the company and how well they did that quarter. But all companies that do pay a dividend give you the dividend per share, or DPS, usually about a month before the dividends are given out to shareholders. Now, there are several ways that companies do give back to the shareholders in different forms of payouts. One of which is giving stock to the shareholders. Instead of getting a cash handout, they're actually given more stock, which gives them an incentive to hold on to it longer and make more money on the next dividend payout. There is also, like I said, cash payouts, which is relatively self-explanatory. The company just gives you money back. Now, you can do whatever you want with that cash, whether you want to reinvest that or if you want to go ahead and move that into another portfolio. Now, I will say that some use this dividend payout as a form of actual income. Now, you would of course need a ton of shares in order to make that happen, seeing as though you're paid out mostly quarterly, but some actually make it work. I personally use the DRIP method. No, not in the fashion sense. I'm actually talking about DRIP, or Dividend Reinvestment Program. Now, what this means is you're essentially just reinvesting those payouts directly back into the company. Same way that if they gave you stock, you would just be holding on to that. I take my cash and put it right back in. This is good because most of the time you can get it at a lower cost basis, so you might be getting a stock that you really like cheaper, or you're actually just gaining more stock back. This way you have a higher investment and a higher return in future dividends. This is just my choice. I want to make sure everybody does know that this is not financial advice, and please do your own research before investing into a company. Now, speaking of research, I've actually done some of that for you to kick off your investigating in companies. Now, the surprising thing is there are companies that actually pay you back dividends that you hear every day that you may not have known of. For instance, AT&T, Verizon, Coca-Cola, Walmart, Intel, it goes on. Even Apple does it. However, that doesn't mean that they're the best performing stocks or that they pay you the most dividends. Stocks that I usually try to keep an eye on are some of the ones that follow here. Number one is Walmart. That's right, the shopping superpower. Now, this pays you about 1.6% per year, or about $2.44 a share per year. And again, this is paid out quarterly. Now, again, that does not seem like a lot. $2.44 is just enough for a bottle of soda. However, you have to look at the company as a whole here. You can't just be looking at a dividend payout. I will say recently Walmart took a hit in their earnings, just like most other major retailers, and they also went ahead and reduced their outlook in the future, and that made the stock drop tremendously. It is not going anywhere, people. This is a company that will stay true and true. I expect it to rise again very, very soon, and like I said, I don't see Walmart ever leaving. Now, number two is actually Coca-Cola. That's right, the soda manufacturer. Now, the world-renowned drink maker actually pays 2.79% dividends per share, or about $1.30 a share right now. Again, Coca-Cola is a significantly lower stock price than Walmart, and that's why it would look a little bit lower. And again, the way you have to look at this is if you were to invest the same amount of money into Coca-Cola as you were into Walmart, you would be getting more dividends payout from Coca-Cola. Now, back to actually Coca-Cola stock itself. This is a very stable company. It doesn't have that many drops. It is very, very safe play, even through bear market times. The final stock that I am watching right now is going to be DUK, or Duke Energy. They just raised their dividend payout to 3% per year, and that's paying about $4 per share. Now, this is one more of the delightful dividend payouts, especially since it's a major utility company. With new money being injected into grid stabilization with the bills that were just passed, and renewable resources being used as a new form of generation that is cheaper and cleaner, it is safe to say that this stock will stay stable, if not rise, in the very, very near future. In fact, I would keep an eye out on all major utilities. Even when there is a bear market, that does not mean that utilities go away. You still need power. So in review, dividend stocks or blue chips like we talked about are just a very stable way to make money without actually having to do anything. It's a very, very nice way to make passive income without having to do any actual work. If you enjoyed this video, if it was very helpful and informational, I hope you guys give it a thumbs up. And also please subscribe for more personal finance information coming out in the future. Thank you, everyone.